Hi everyone. If you've been looking at the Indian stock market lately and just thinking, what on earth is going on? Well, you are in exactly the right place. Today we're going to break down all this recent turbulence and really understand what's been happening.
So this is the big question on everyone's mind, isn't it? Why has there been so much nervousness in the market? If you've been wondering the same thing, let's find the answer together.
To get the full picture, we're going to break this down into 4 parts. First, we'll look at the pressure the market's been under. Then, we'll see what happened globally to cause it. After that, a look at how investors are changing their game plan. And finally, what the path forward might look like for you.
Okay, let's dive right in. First up, let's just acknowledge how rough things have been lately. And honestly, these numbers might surprise you.
Just look at this number. In March 2026, in a single month, the Nifty index dropped a staggering 11.3%. That was the worst monthly performance in over 6 years. That really gives you a sense of just how much panic was in the air.
So why did this happen? A huge piece of the puzzle was the FIIs, the foreign institutional investors. You know, these are the big overseas funds that invest massive amounts of money into our markets. Well, they pulled out a record $13.3 billion. When that much money leaves that quickly, it puts intense pressure on the whole system.
But that just leads to the next logical question, right? Why did these foreign investors suddenly decide to pull their money out? The answer, it turns out, isn't in India, but on the other side of the world. Let's take a look.
The root cause of all this volatility was the rising tension between the US and Iran in the Middle East. See, whenever there's a threat of a major global conflict, investors get scared. They flee what they see as riskier markets and look for safer places to park their cash. On top of that, these conflicts tend to drive up oil prices, which directly impacts economies like India's. And now, look at how things are starting to change. This expert report from Standard Chartered points out that the ceasefire between the US and Iran has given the market a new sense of hope. It's a massive positive sign, suggesting that maybe, just maybe, the worst is behind us.
So as the global situation changes, so does investor thinking. We're seeing a new chapter begin in the market, one where selling pressure is giving way to new opportunities.
This one line from the Standard Chartered report says it all, really. Buyers rather than sellers. It's a simple but powerful statement. It means the mood of fear is fading, and smart investors are now looking at the downturn as a real buying opportunity. And leading this shift are our own domestic investors. While foreign investors were pulling money out, India's own fund managers stepped in and helped stabilize the market. And what are they doing? They're shifting their money out of smaller, weaker companies and into India's biggest and strongest companies, what we call large caps. In this new environment, experts are recommending a special approach called the barbell strategy. Think of it like this. On one end of the barbell, you put most of your money in super safe, high-quality companies. That's your fortress. On the other end, you put a little bit of money into a few select sectors with high growth potential. That's your rocket ship. By avoiding the average stuff in the middle, this strategy gives you a great balance of safety and growth.
So what does this barbell strategy actually look like in the real world? Let's take a look at which companies and sectors the experts are recommending right now. The advice is pretty unanimous. Focus on quality. That means investing in India's largest and most reputable companies, the large caps. These are the businesses that are fundamentally strong and can easily weather the kind of market ups and downs we've just experienced.
This slide really clarifies where the money is flowing. Experts are recommending an overweight position, meaning invest more, in sectors like financials, consumer, and healthcare. Meanwhile, they're suggesting an underweight position in sectors like metals, at least for now. This helps you see where the hidden opportunities might be.
For example, just take the financial sector. Recently, big banks like HDFC and ICICI announced fantastic profits. It's solid proof that the foundations of these large companies in the overweight sectors are incredibly strong. So, what can we learn from all of this? The big lesson is that the market is now moving based on solid strategy and company performance, not on fear and emotion. The time for panic selling is over. Now is the time to invest thoughtfully with a clear plan.
And so, we're left with this big question. As the global situation changes, will the confidence of Indian investors become the new, strong foundation for our market, one that could lead us into the next bull market or period of growth? It's definitely something to think about. Thanks for watching.